move on with Mr. Paul. So, I'm Paul.
Okay, thank you, and thanks, Prachi. Could we go back to slide 24 just to kick off my part of the discussion? And as Prachi has been saying, we can use the rating scale to better differentiate both Vietnamese credits and to really provide a better scaling of perhaps the potential for loss and default going forward. I'd make the point in terms of the US or the S&P global default rate and the patterns that we see there. And and I refer to a number of the questions that have asked about what will the PDs be or the probabilities of default be for FiinRatings. I would make the point out that really these are not default rates. These are just backward-looking results of what happened, and they're simply as a result of S&P's ranking of companies. When they started in this business and started keeping these statistics at the beginning of 1981, they weren't intending to get these outcomes. These are simply the way it turned out. And at that stage, it's also worth noting that most bonds in the early 1980s that were issued in particularly the US market, but also in the Euro markets, were nearly all investment grade. There were very few of these sub-investment grade bonds. There were very few BB, single B, triple C ratings. And so the rating grade at that stage very finely made fine gradations between AAA, AA, single A, but really there are just huge jumps in default rates that we see between BB and triple B, single B and double B and triple C and B. So as we rank companies in Vietnam, we are probably not going to compress the ratings because of the sovereign ratings issue, but rather we probably wouldn't seek to get that S&P global outcome, because that really doesn't give you fine gradation between the speculative grade area. So my guess is, and it's more of a prediction than a promise, but you're more likely, I think, in the Vietnamese business to get outcomes in default rates closer to that of CRISIL and of TRIS than the bottom end of the S&P rating scale. And I think that will give investors better differentiation and better outcomes. And the other point that investors always need to make, or should always be aware of when they're thinking about these default charts, is not to think of them as PDs, as probabilities of default, because these are averages over many, many years. And as we go to the charts, these look very smooth, but actually from year to year, default rates are anything but stable. So if we go into that other chart, Mr. Hoang, and this is the US speculative grade ratings, the BB, single Bs, triple Cs, and the actual default rates experienced from year to year. And as you can see, whilst you can see the average ratings from the previous chart, and for this, the average default rate for speculative grade rated securities in the US has been around 4%, you can see there are huge variations. So if you're, in a sense, calculating your PD at the 4% range, you're in for a few surprises. So what you do, in fact, see is huge cyclicality in default rates, and they tend to move from this 4% average up to spikes. And in most recent recessions, they've been over 10%. Interestingly, in the last recession dealing with COVID-19, the actual default rates have been about half of what they had been in previous recessions. Again, I think that reflects the very significant intervention of governments and central banks around the world trying to cushion the effects of that recession. But that's the important thing to note. Don't get too hung up on PDs and be a bit more modest about what they say, and probably expect outcomes in Vietnam more in line with what we see in other domestic rating scales, such as CRISIL, such as TRIS. And that's the S&P, the same data that you saw before, and basically in graphic form. And again, what you see there is that that crushed up investment grade default pattern down the bottom, but also showing that within the speculative grade, there are very significant default rates. So the securities that have been rated CCC at the bottom of the scale, after a 5-year period, on average, nearly half of those securities have defaulted. Much lower, say for single B, after 5 years, under 20%. But that does show that the way the S&P has done it, I think more as a result of history than any planned outcome. You've seen very sort of the differentiation in the investment grade is very, very modest.